Okay, so, and when we're talking about investors, we're not just talking about mom and pop investors. And what that means is we're not talking about like when folks purchase a home and they're ready to move on to another home. So they rent out the initial home that they have to move on to their secondary home, right? And we say, okay, that's an investment property. We're talking about corporate investors. And with these corporate investors, they have deep pockets. And with the deep pockets, they're able to purchase homes. Now, for a long time, I kind of understood that investors was purchasing the property, but I really didn't know how deep their pockets were. I did send a listing to the committee to show that an investor, there was a home that was listed for $500,000 and the investor purchased a home for $700,000, which means that they gave the seller $200,000 additional cash. They didn't ask for any closing costs or anything like that. The problem with that is that we all want our homes to appreciate, but we want it to appreciate organically. And how it appreciates organically is by usually transportation infrastructure is in place, more businesses may come into an area, income levels might have increased. All of those things lend to an organic appreciation. When it's not organic, what happens is when the tax assessor comes out to assign the taxes, just like how when the homes were going into foreclosure, I think Obama put something in place where they didn't necessarily have to calculate homes that were in foreclosure. But in this particular case, how does the tax assessor go past, if you have a subdivision, let's just say of 200, and let's just say 50 of those homes were purchased in cash, artificially appreciation, right? The tax assessor is going to be looking at homes that have recently sold and within a certain mile radius. So if your income hasn't appreciated, and I've talked to people that said, well, you know, I don't mind if my taxes go up a little bit as long as I get better service, right? Well, one, who said that you were going to get better services? And two, I've seen people lose their homes, not because they missed a mortgage payment, but because the taxes were so expensive that they could not afford to stay there. Now, usually we see gentrification where communities have dilapidated homes, abandoned, and so forth. This is another form of gentrification where you move out because you cannot afford to be there. So it doesn't necessarily mean that these communities are run down, dilapidated. It just means that you seek higher ground to go somewhere where you could afford. So that, and then we're talking about seniors too. That's a group of people that they're on a fixed income. They're on a fixed income. So the concern, and let me say this, you have people that's out there that still does not understand the impact. So you have homeowners that's saying, well, what are you talking about? I love the fact that my home value is going up, right? So they love that. And then you have the home buyer that because the home prices are going up, they sell their homes, right, to get the cash, right? But I had a seller that sold their home only to go and look to purchase a home. And that was like last August. We're still looking. I was working with a buyer who we wrote a contract. The seller, we offered the seller a couple of dollars more. The seller withdrew the home from the market because they did not have nowhere to go. So you have people at different levels of understanding the reality and the magnitude of this issue.